Hello, and welcome to Miltton Futures event on the crypto asset revolution. Will crypto assets transform the economy as social media redefined communication? This event is produced by Miltton's contactless event solution. I'm Peter Partonen, and I'm the moderator for today's event. During the next hour, we will explore the possibilities of crypto assets, their role in the democratization of wealth, and the potential impact on the world's economy. Joining us today are four esteemed speakers in the field of finance and investment. Piia-Noora Kauppi, Managing Director of Finance Finland, Raoul Pal, co-founder of Real Vision and macro investor, Reima Rytsölä, the CIO of Varma, and Yichen, CEO of Tesseract Investment. We open the discussion with a look into the different aspects of existing structures from established institutions to underprivileged communities, and how shifts in power affect economies from a global and Nordic perspective, followed up with a review on the opportunities and implications of using crypto assets as a means to define wealth and whether its future lies in the hands of many or concentrated few. A note to the audience, we want to hear from you. Please feel free to send or share your questions and comments by clicking on the Q&A button on the right side of your screen. Assessing the wealth gap. Financial inclusion is on the rise worldwide, accelerated by mobile phones and access to the internet. Globally, 69% of adults, or approximately 3.8 billion people, now have an account at a bank or mobile money provider, a crucial step in escaping poverty. However, 1.7 billion people worldwide still remain unbanked or not served by a bank or similar financial institution. Gains have been made, but unevenly across countries. In some economies, account ownership has surged, while progress has been slower elsewhere, often held back by disparities between the rich and the poor and between men and women. In fact, women make up 55% of the world's unbanked population. For many of these 1 billion women, globally, they have no access to financial services, and that means their money is unprotected. Inaccessibility to upward mobility is not exclusive to developing nations. In the US, 47% of Black households are unbanked or underbanked, where factors stemming from policies that reinforce systematic inequality has seen the growth in household wealth vary dramatically between ethnic groups. Black communities and Hispanic communities, the largest minority groups in the US, lag behind their white counterparts, where the median white family has more than 10 times the wealth of the median Black family. In Finland, individuals with non-Finnish backgrounds find it hard to secure gainful employment, even though they might be qualified or in some cases overqualified. Culture and ethnicity have replaced race as a basis for discrimination, where surnames and country of origin are deciding factors on the types of jobs available, where immigrants are steered to lower-skilled, less-paying jobs. For many, entrepreneurship becomes vital to progress. However, inaccessibility to vital information for grants, loans, and other support systems remain an issue. Closing the wealth gap is a pressing moral and social issue and also a critical economic challenge. In addition to improving the quality of life on human development from affected communities, inequitable wealth places a strain on economies as a whole. It is estimated that the dampening effect of the racial gap between Black Americans on consumption and investment will cost the US economy $1 trillion between 2019 and 2028. This roughly amounts to 4 to 6% of the projected GDP in 2028. From a gender perspective, the McKinsey Global Institute estimates that fully incorporated women into the economy would add $12 trillion to global GDP by 2025. If every country matched the progress towards gender parity of its fastest growing neighbor, global GDP would increase by the above projected figures. On a global level, establishing financial identities for the world's financially excluded or unbanked population would add an extra $250 billion to global GDP, the equivalent of increasing GDP per square capita by 6% in certain low-income countries. Crypto assets, are they the solution? crypto assets have been hailed as a prominent solution to the challenges posed by the wealth gap. Untethered by institutional regulations, along with any accompanying bias, this is seen as a favorable option for marginalized groups to acquire and distribute wealth. But is it really so? What are crypto assets exactly, and should they be used in this method? Continuing with this state of affairs is Saara Poki, Public Affairs Advisor at Miltton Networks, who will assess the implications of the crypto revolution from a political and regulatory perspective.
Thank you very much for that introduction, Peter. I'm really looking forward to our panelists weighing in on these issues. Let's remember that this is a political issue too. So let's switch for a moment to talk about the political and regulatory perspective on this question. Where do we currently stand in terms of regulation of crypto assets? When asking that question in the political sphere, I have to say that I would assume that the most common answer would still be, I'm sorry, crypto what? It is a complex issue, so I'm not going to try and come up with a definition myself. Instead, I am going to rely on an Oxford Dictionary definition. A cryptocurrency is a digital currency in which transactions are verified and the records are maintained by a decentralized system using cryptography rather than by any centralized authority. Crypto assets, then, more broadly, are assets that can hold value without financial regulation and institutions making sure that this value exists. Rather, the function of securing the value of something is programmed and secured, again, through cryptography. Now, if after this you're still asking, crypto what? Bear with us. Hopefully the next hour or so will shed some light on this. In any case, there is no doubt that the public and political knowledge of the issue is increasing. For example, in Finland, the discussion on the opportunities and threats caused by crypto assets is definitely increased just recently. Nonetheless, for sure, the regulators are catching up with the development, but this is not unique to crypto assets. This is quite common when it comes to new technologies. That is also possibly why the current public and regulatory focus is very much on the immediate risks. Could this be the bubble that makes our economy burst? To what extent do cryptos enable things like terrorist financing and money laundering? Can we just pull the plug on the environmental effects of all of this? These are undeniable challenges that we'll have to, and that I do believe will be addressed also by regulatory solutions quite soon. But are these truly the questions that will really define the role of crypto assets in our economy and in our society? No matter what you think of this development, it should by now be absolutely clear that enough different actors believe that the future lies with crypto, that the bigger potential shifts in global power should be examined. If you allow me, I'll draw a comparison. In the last decades, we've seen another technology, the internet, develop in ways that many did not foresee. The platformization of the internet has created companies that are more powerful than ever. Yes, in many ways, the internet and especially social media have democratized resources such as access to communication, access to information, and so on. But the companies that give the access to these resources online actively now act as the gatekeepers of the internet, effectively. And this does have societal implications. So the question to ask, in my view, is whether crypto assets are immune to a similar development, or whether the gatekeepers within this system, this technology, are already in the making. My colleague Laura will also later on develop this in her presentation. With social media, for this comparison to work, it's important to understand that the power doesn't really come necessarily from controlling the technology itself, the internet. For example, on the internet, you are free to establish a new platform, new social media if you'd like. But it comes from controlling the popular intermediaries. So the question is whether crypto assets will truly and completely cut out the intermediary. What about, for example, the power that the service providers hold over these systems, or the maintenance of indispensable parts of the system, such as client software or online wallets? Of course, it's relevant to ask whether it's wrong to put all of the different crypto assets in the same basket in this regard, given there are inherent differences among them. And this brings me to my last question. Let's start from asking ourselves, which actors are now influential? Which actors could turn the crypto ship one way or another? The European political scene has definitely taken its first steps towards crypto regulation. There's a recent legislative proposal from the European Commission called Markets in Crypto Assets Regulation. And for sure, Europe won't be the only region moving forward with this. But for example, from the European legislative perspective, which I know very well from my past experience, processes like these usually take years to complete. What about the central banks? Have they woken up? Will they have a meaningful role over this development? What about the public? Will it actually be the curious audiences, the speculative investors, ordinary citizens who believe in these opportunities that crypto assets offer, who will determine the direction of all of this? Perhaps. But in my view, since regulators play catch up, while the technological development is moving very, very fast, and new use cases for crypto assets emerge as we speak, the market is left rather free to develop. So, will this be a true grassroots revolution, or does the future lie in the hands of a concentrated few? And now, answering that question will not be easy. I don't know if it's impossible. I, for one, certainly don't have the answer to that at the moment, but I am pleading for our panelists to weigh in when Peter takes you through our interesting discussion. At this point, I am really glad to hand over to my colleague, hailing from Sweden, Laura Lindholm, who will look more precisely at the rise of retail investing and other recent events that indicate a global power shift in the capital markets from a Nordic and global perspective. Thank you very much for your interest, and now over to you, Laura.
Thank you very much, Sara, and welcome to the digital office of Miltton in Sweden. I will, as said, use my 5 minutes to discuss the recent rise of retail investing, which of course this year has really, the recent discussion has been to a great extent focused on the GameStop saga and the financial anti-establishment adventurism that the short squeeze in GameStop in the United States caused. But I think it's really important to note here that GameStop was just the effect of something, and much less focus has been given to actually the cause behind what happened in the States. So we need to look at the wider significance of the events, and specifically the potential that technology has to in democratizing wealth, which is of course one of our key themes here today. So first, a short recap, and I would like to lift two things. The first thing is that we all know that technology has and is changing many existing and established structures in finance and the capital markets. And the other thing is that we all also know that it's very clear that the way we will save and trade and make payments is already changing, and for sure will change in the future. So while we need to focus on the ownership of data and the related power, which Sara so brilliantly already touched upon, we also need to discuss and focus on what happens if more people have access to the financial markets. I think it's fair to say that the ongoing shifts in information flows have catalyzed new business models. This we also already know, and this has led to a transformation of how financial markets work. Information technology has in recent years, for example, been used to make the cost of financial trading low or even free, and I will come back to this theme a little bit later on. Technology can in the future make markets for all kinds of assets as liquid and as accessible as the stock market is now. Deep structural changes in financial markets are really taking place, and the frictionless trading of assets is really supported by the technological advances that we have seen. And I think if we change the slide, the percentage mentioned here in the quote on the slide, which is of course from the United States, so you know, quite far away from the Nordics, is a great indication of the power that retail investors have. And I think this figure would be really interesting to see for the Nordic countries as well. I think we have a tradition of focusing on the amount of retail investors that we have. This is especially the case for Finland and Sweden, but we really also need to look at the power that this group of investors have over the equity that exists in the market. So are we seeing a new era of greater retail investor influence, or is this just history repeating itself? I know a fair deal of people have argued the latter. Well, this is of course not the first time that retail investing and retail investors rise. History has seen many periodic retail investor manias, as some of us are well aware of. So what is the same? Well, the same thing that is happening now is, of course, that as a result of a very attractive development in the share market, there's an increased interest in the market from retail investors. And of course, this has this year also been really helped by the push from the pandemic this and last year. So in that sense, we are really in the same situation as with the Nifty 50 boom in the 1960s and the dot-com bubble in the 1990s. But there are a few differentiating factors, and I would like to lift three. The first one is that the technology we have to trade, it's both available, but it's also much more accessible now to everyone. Well, not everyone, but the developed countries. I think some other aspects here you need to see that this is kind of, the Nordic and the European and US aspect of it. So then the access to financial market data has also changed. So for example, stock trading is much cheaper, and it's also free for those who are willing to give up the use of their data. And this was really visible in the GameStop saga. The digital and social media platforms available, I think this is the biggest change. It's now very fast and easy to organize actions. Of course, it took months to kind of build the short squeeze in GameStop, but when things happen this fast, it's really easy for retail investors to organize these type of actions. And the power of social network platforms can also in the future fuel these major market moves. Now, from a Nordic perspective, it's really important to also understand that the Nordic capital markets are heavily regulated, and they are also monitored heavily. So something similar to GameStop is probably not the most likely scenario in the Nordics. But looking at the future, what lies ahead here? Well, in the future, retail investors can organize themselves fast, and they can gather a sizable chunk of shares in companies and then push a company to, for example, make operational or leadership changes. And I think the big question here then is that will there be a global shift in the power related to retail investing? Well, maybe not, but definitely a redistribution of power that favors retail investors, and that's already actually happening right now. I think those are the thoughts that I would like to leave you with, and thank you for my part, and over to Helsinki and the panel. So the floor is yours, Piia.
Wow, that's quite a bit of information and really thought-provoking questions. Sarah and Laura, thank you so much for sharing your perspectives. Now shifting to our panel of experts, thank you so much for joining us. And I'll get straight to the meat and I'll get started broadly. But to begin, I think for those of us, and I think myself included, when you refer to crypto assets, what do you mean? How is it different from cryptocurrency and other traditional financial instruments? This can be for Raoul, can be from Yichen. I know you.
Yes, crypto assets are essentially assets that are on a blockchain. So blockchain technology, which is generally driven by cryptographic formula to allow a trusted and proven ownership of certain assets. So what this whole system is the ability to record and transfer assets from one person to another in a trusted manner that is distributed. So at no point do we rely on a central middleman to do so. And that can apply from everything from cryptocurrencies, such as Bitcoin, or platforms such as Ethereum, or single assets such as non-fungible tokens, NFTs. So it's a hugely broad space and it's developing almost on a daily basis. But overall speaking, it's a new way of recorded ownership and trust of all assets.
Okay, wow, thank you. So who's responsible for managing cryptocurrencies as there's no central institution? And another question, is it a risk that there's no central institution? Yichen, maybe?
Yeah, sure. So I think the way to really think about this kind of stuff is that it's collectively is very much of a decentralized system, right? So essentially, whoever that owns a piece of the token will be able to contribute to the governance model of it. If you look at some of the DeFi platforms that is currently getting all the rage. In the internet space, they essentially have a DAO system in that by just owning those tokens, you can essentially vote as a proxy for governance of controlling of how you want to run essentially this cryptocurrency system, essentially like a proxy vote in a company, really.
Okay, so then a little bit of a devil's advocate here. How can we ensure that the developers don't codify their values into the blockchain? For instance, Facebook is planning to launch its own cryptocurrency. Can we trust that the platform will remain neutral to users? Yichen, sorry.
In a specific case of like Facebook, I would probably not put all that much faith in it. But I think what's really interesting here is that if you look at the entire human history, right, we spent 5,000 years. Most of that entire human civilization, the only thing that we have is government's money, right? Is that essentially papers backed by a sovereign state, and that's have worked relatively okay thus far. Exactly 11 years ago, cryptocurrency was invented. So Bitcoin, the white paper came out from Satoshi, and then what we have now is essentially what I call, people's money, completely decentralized. It floats out there. Once it's out there, you can't really control it by essentially any a sovereign state, any specific jurisdictions. And then a few years ago, what you see as a growing trend is that now you have Facebook coming up with Libra, or whatever it is called as of today. And I think it's just one of the many new companies who's going to actually do exactly the same thing. So that's what I call corporations' money. Right. So now we have this very interesting setup where you have government's money that has been around forever. And then you have people's money, which is a bit anarchist in nature if you think about Bitcoin. And then you have the corporation's money, which is essentially a version, like some sort of a mixture between the two. So going forward, we will essentially see how those three governance model in terms of economy and the fundamental elements of economy plays out. Only time can tell.
Okay, wow, thank you. That was a really, really elegant answer.
Could I challenge?
Sure, please.
Yichen was saying. Yeah, it started like this. So I agree that it was supposed to be decentralized. It was supposed to be unregulated. It was supposed to be free from government control. But now we see completely different phenomena happening. Now it's becoming more and more decentralized, the whole crypto asset world. Actually, there was a conference last week at Carnegie Mellon University, where Professor Rutledge, who is a very good expert on these topics, was saying that it's stunningly centralized how the world of financial industry around the crypto assets is now developing. And also, if we think about unregulated, there are many examples that there are already regulation on the way. But there was a referral about the European directive or regulation which is coming, but there are also examples of existing regulation. It's not only coming regulation, so lots of regulation coming on crypto assets. And finally, about the central bank lack of government control, control is increasing all the way. So, for example, now in Wyoming, where they have created this DAO, the world of entities based on crypto or based on digital distributed ledger technologies. Now they are trying to gain access to the central banking system, to the FDIC system, and it will be, of course, governed by the Fed. So they are searching for links to the traditional old-fashioned or old financial system. So I think that this used to be true, that it was all different, but now it's becoming same as the old financial industry.
So then would it be a fair question to ask to say, like, how can crypto assets be managed to avoid like a similar scenario of social media where a few players share the power of influence and communication across the globe? How can we even like have it so that it stays true to the roots of being democratized for the people, so to speak? You know, Raoul, if you want to weigh in, I'd like to hear.
The point being here is something like Bitcoin cannot be controlled by anybody. It's created that it's entirely distributed. There is no governance model. So in that way, nobody can take control of anything here. The money exists, Bitcoin exists, there is an issuance schedule that exists, and that's it. And that's pretty much true for much of the space. Yes, there are business opportunities, applications layers such as DeFi. Some are less centralized, others are entirely decentralized. So there is a whole gambit of solutions that are out there. But if we take Bitcoin as the kind of base layer of it all, that is absolutely distributed and not controlled by a single entity. So there is no Facebook. And also, just to clarify the Facebook DM model, Facebook DM is actually using fiat currency. It's using the US dollar, but creating something called a stable coin, which puts that dollar on a blockchain. And what it's doing is actually creating its 3.5 billion users the ability to transfer value from each other, whether it's remittance payments or buying goods or storing dollars on a wallet. So there's so many different solutions out there. This is not one kind of size fits all, and there's no one winner in this space. There can't be by definition.
Right. Okay. And I hear this term. Please go ahead, Yichen.
Yeah, I was just gonna chime in for a couple for throw my 2 cents on the floor here. So, Pia, I have to agree with you. You made very many good points here. And this is something that, for example, we have to work with quite a lot. But I think there's one distinction that's important to be made here. There's a difference between, I think in the Carnegie Mellon presentation, what the professor was actually talking about is that the distribution of crypto wealth is extremely centralized, right? So I think what we were actually talking about, and what is actually more important further on, is really that the governance model of this economic system, is that centralized or decentralized? And I would have to argue that in cryptocurrency, in Bitcoin, for example, despite the fact that the wealth is extremely concentrated, the governance of it is quite spread out, right? And then second thing, in terms of regulation, cryptocurrency itself is not being regulated. What has been really heavily regulated, if you look at what happened with Coinbase and with those kind of firms going IPO, is really that the government is regulating heavily the interface between the traditional financial system, so the fiat system, and the cryptocurrency system, right? Because that's the place where you can actually put the controls down. Once the money once a value is converted into cryptocurrency, and once it's in that cryptocurrency space, then it just becomes truly like a borderless set of a system. Like jurisdiction, it will be really, really hard to apply to that, as Raoul pointed out earlier. Yeah, right. Just my 2 cents there.
No, I really appreciate it, Yichen. And I've been hearing this term, DeFi, being thrown around, decentralized finance. Can you shed some light on why is that important and what are the benefits of it? Yichen, please, because you were mentioning it quite a bit.
Oh, was that a question from me?
Yes, sorry.
Yeah, sure. Sorry, what was the question? What is
what exactly is decentralized finance and why is it important? Like, what are the benefits as opposed to traditional crypto assets? Like decentralized finance seems to be a special area within crypto assets. So I just wanted to
I'll try to simplify this as much as I can. So basically, the most important thing to realize here is that if you think about a bank, right? What is a financial system? Financial system is basically you have a centralized or trusted third party somewhere in the middle that facilitate transactions between numerous parties. That's basically what a financial system is in its most basic form, right? So essentially, what DeFi actually means is that instead of trusting, for example, JP Morgan Chase in the middle, you would actually entrust a network, essentially smart contracts, so a bunch of codes essentially to basically verify those transactions cryptographically, therefore replacing the need of having a specific third party. And it's kind of important because that, because the third party, a trusted third party as a verifier in the middle, this particular system is very, very much bonded by things like, national borders, specific jurisdictions, cross-border transaction still takes more than, a couple of days to settle. Whereas if you do it completely digitally through a decentralized manner, the efficiency, the speed and effectiveness could be, dramatically increased. And not let's not even forget about the fact that, this democratizes access to a lot of things that currently people who are underbanked cannot have access to. We're pretty far away from that utopian type of picture, but I see a lot of potentials in which that it could be one of the contenders for being a solution to that.
Right.
Yes, essentially because it's an algorithm that let's say dictates the borrowing and lending. You don't have a bank in the middle saying, well, you can't borrow money because you're not that kind of person and you're not that kind of person, or we don't feel like lending money. That all goes away. So it actually democratizes the whole system of borrowing and lending. And that's really unique here.
Great. So then I think it's fair to ask you, Raoul, that you believe that this system will definitely democratize wealth. Is that a fair statement to make?
I do, and for many reasons. The key reason here is many of these are assets. If we look at Bitcoin, it's a fractionalized asset that goes down to 8 decimal places. So therefore, however wealthy you are, you can own the same percentage of your wealth in this asset. For example, soon real estate will be going on the blockchain. So a $50 million apartment in Manhattan is out of reach of almost everybody on Earth. But once you tokenize it, you can fractionalize the ownership of it. So somebody, a 23-year-old, building their life savings can have the same percentage of their net worth in these kind of assets that tend to rise more. So not only does it level the playing field in terms of borrowing and lending, but it also levels the playing field in who can own what assets. So we've just recently seen artwork that has traded for millions of dollars, which again, normally would be out of people's hands. Here, you can own a small fraction of it. So if you've got 10 euros to put into a piece of art, and that artwork in total could be worth 10 million euros, you can own your fraction of it. So that democratizes access to all these assets, and that's a game changer for everybody. It levels the playing field.
That's amazing. Okay, so then that answers like a couple of my questions. I'm so sorry. Please, we'd like to hear from you.
Can I comment
yes,
as well?
Because
I think it was important point of view from Raoul. But on the other hand, if we look at it as an investor, and we have a kind of a scale to access different kind of assets, but it still doesn't seem to be a kind of a silver bullet for earning good returns, so to say. So that my point is that even though you have a larger scale of assets to participate, so it probably, however, don't solve the great valuation issue on overall. So my point is that whether the kind of a penthouse in Manhattan is the answer or the wealth that you are not able to participate at the moment, but you can participate, for example, REITs in listed REITs in New York Stock Exchange or something else. So my question is that whether that is a kind of a solution for a democratized value creation. I think it's more of an issue at the moment that so many people don't have a kind of a investable wealth at the moment.
The interesting thing about REITs is they don't give you fundamental ownership of the asset that is transferable and in your name. So they're kind of a holding vehicle. So it's very different. This gives you direct and total ownership of your proportion of what you own of it. And that's kind of groundbreaking. You know, we've seen some fractionalized ownership of real estate in the past, but again, it's much more complex than this is. So, you know, it's very nascent, it's early phase here. But I do think that it's going to offer a very different opportunity set for many. And, you know, not to be able to buy some assets because of your net worth is less, I don't think is fair in this world. And we've seen the rich get richer and the poor get poorer because of this divide, because basically fixed supply assets have gone up so much in price over time due to the action of central banks. And this way helps others participate.
Right. And then
Also, I think
that yeah.
Please, Noora.
I actually think that the finance world won't be the biggest item for democratization. I believe that it happens on other frontiers. So I think that democratization effect of the distributed ledger technologies is very, very wide. It will happen in more areas, but in finance, it is one of those very globally regulated industries. So it's not an issue that we would have only local or national rules. We have already, for example, between the central banks, we have already FSB, which is doing global regulation for the central banks. So I think this is an area where, in order to democratization to really happen, we need to tackle those traditional obstacles, which are legal uncertainty, inertia of political decision-making, and also fragmentation. Because we don't have a single market now in Europe. We don't have a single global regulation on, for example, on what is the crypto asset, but it will come. I'm sure that we will get rid of these obstacles, and then this democratization might happen, but we are far from that. And the world of finance is very regulated. So social media, for example, is much more like the likelihood that this will happen first in the social media is much bigger than in finance world.
So then is it fair to say that crypto assets, it's not a revolution, or is it a revolution? Because I'm really curious because I'm hearing different viewpoints and everything is valid. But what is really your take? Is it really something that's going to change the world? Are we really going towards the next coming? Or is it something that it's going to be shaped and narrowed into something else far from what it was originally intended?
I think the issue is what are crypto assets? What are digital assets? There are many things. As we've talked about here on the panel, is that integration with traditional finance is going to be heavily regulated, and probably rightly so. I mean, governments want their share of taxation. They want to make sure that people are protected, and that's okay. What happens outside of that, that's a different world. And that's where the world of DeFi and stuff can operate outside the traditional system. So that becomes interesting. But then we talk about the digital ownership of everything, and all value is going to be transacted digitally in this kind of format. That's everything. We will see the rise of community tokens, where people can play a part in a community, whether it's supporting a pop star or whether it's a charity, where they create ecosystems that release different value propositions across that ecosystem. We will see kind of the rise of these assets on blockchain, and that's traditional assets such as real estate. So I think the revolution is much larger than most people understand right now. That interface with government, I think that is still being worked on, the regulation needs to come to make sure that there are protections for people. But this whole space is, I think, much larger than anybody quite realizes right now. It's already a $2 trillion asset. It's the largest, fastest growth of any asset in history. Its adoption is faster than the internet in the equivalent period. So it's growing, this whole asset space is currently growing at 113% a year in terms of number of users. At the equivalent phase in the internet, that was growing at about 63% at peak. So this is the fastest adoption of any technology the world has ever seen, with the largest rise in market cap and value the world has ever seen in the shortest period of time.
So just on that point, how stable are crypto assets? Are they poised to follow the same trajectory as the dot-com bubble of the 90s? By your own admission, you're saying this is the fastest growing technological phenomenon that we've seen ever. And I think in this discussion, it's also important to note, like, is this to last? Because usually brightest stars, fade the fastest. So there are no guarantees.
It's a huge ecosystem.
Right.
Now, when you involve humans, you involve emotion, and humans create speculative manias and they create despairs and busts. That's as old as history. If you go back and read any writings from 2,000 years ago, Roman times, it was always the same, right? Humans are the same. So that human behavior we cannot take away. Right. But if you go back to the dot-com bubble, which is a narrative, if you go back, what happened to the internet? Well, actually, it changed everything. And if you go back and look at, let's say, the chart of the NASDAQ or one of these kind of technology-laden indices, that looks like a small little speed bump en route to what is Metcalfe's law, network adoption. So the network adoption of the internet was probably one of the most important things of all time. And yet we had a kind of boom-bust cycle within that. That's pretty normal. And we've had a few boom-bust cycles within the crypto space, and we'll continue to do so. I mean, it's not gold. It's not a safe haven asset because it has this kind of call option on the future attached to it. And we don't know where the future actually lies.
Right. Nora, Reima, Yichen, would you agree?
Actually, so far, when we talk about this particular topic, we really talk about it in the context of this is being some sort of a financial assets, right? Being speculative or not, it has volatility, does it have or not? We often talk about things in this particular setting, which I think is somewhat a bit narrow, right? So I think one thing, let's not forget about the potential societal impact of having this thing called cryptocurrency. And I want to share a story of, like, a personal story of mine to kind of illustrate this point. So I have the luxury of living in a country like Finland, right? So the government here are fairly reasonable. Nothing's crazy is going on. It's ranked as one of the least corrupted country on earth. So life for citizens here is like fairly good, if not very good by global standards. But if you think about it on a global perspective, right? So 2 years ago, I went back to I went back to China for business, and I met this guy who early adopter, 30-year-old coder who 10 years ago mined a whole bunch of Bitcoin himself. Now he's worth a little bit over $1 billion or so. Then I asked him, like, what did you do to your $1 billion? He goes, well, I bought a house for my parents, then I bought a house for myself, then I bought myself a really nice car because I'm a car guy. I'm like, great. So what happened to the other 999 million that you have left over? He said, well, it's pretty much just still in Bitcoin. I was like, well, have you ever thought about diversifying yourself a little bit? Speaking as a finance person that I am myself. His answer is actually quite revealing to me. He said, sure, it is volatile as hell. And it is true that tomorrow I can lose 30% or 40% or whatever percentage of that 900 million that I have left. However, it is censorship resisting, right? Like, where we grew up, it doesn't really matter like what you do. If you get on the wrong side of the government, it might just show up and take everything away. And the whole and that essentially, if you think about for all the citizens living in a country like this, it doesn't really matter how volatile Bitcoin price is. That's essentially an insurance that you buy against crappy government, and you're never going to run out of those. right? So I think when we talk about this kind of stuff, we should not limit ourselves to immediately, okay, the volatility of Bitcoin last year is actually 147%, which is, relatively high. Well, the price you pay for that volatility is that, you have you have 100% chance of not getting completely, not having all of your money taken away by someone. And if you look at globally, vast majority of the citizens in this world unfortunately live in an environment, unlike here in Helsinki, where probably that's not going to happen anytime soon, but who knows?
Really elegantly said. Reima, do you have anything to add?
I think that's really important point. I don't know if control panel room could do something with the line. At least for me, it's really, really bad. So if you can kind of decrease the intensity. So, anyhow, so I think it was really important point, and it how would I say, when looking at the volatility, it differs what point you're looking at, or looking from that, and for an institutional investor like we are, operating mainly on the global financial markets, which are, by the way, 80% of that are developed markets, or even more than 80%. So kind of all the risk management controls and so on, and solvency calculations are based on low volatility instruments. So that's one of the reasons why the kind of approach and how we are looking the cryptocurrencies are totally different than for example, the Chinese guy that Yichen mentioned earlier. So and of course, I fully agree that kind of a blockchain technology overall and cryptos might be a really effective on at least partially solving the corruption issue, which is a really big problem and really big kind of obstacle for a decent economical growth in many part of the countries in global perspective.
Reima, while I still have you giving your bits, does Varma have crypto assets in its portfolio, and why or why not?
No, we don't, and I partially already answered that it's the fit is not the perfect for a investor like us. So 147% volatility is a bit of a, how would I say, issue with us, and especially when it at least so far has correlated quite a lot for other risky assets. So it's not kind of a diversifying factor as well.
Okay.
But who knows what will happen in the future? Even the JP Morgan kind of turned its way when it's not that long ago when Jamie Dimon, CEO of JP Morgan, said that it's more like Ponzi scheme, the whole cryptocurrencies, and now they themselves are involved in the crypto market.
So I have some questions here from the audience. Oh, I'm so sorry. Please, Yichen, go ahead.
Yeah, we're just gonna echo what was just being said. So we work quite a bit in the institutional space in cryptocurrency, right? So in the past 4 or 5 years, what we've seen is that 4 or 5 years ago in the United States, some of the most sophisticated trading firms and market makers got into cryptocurrency, and then in the past 12 to 18 months, what we see is that like larger family offices, some like more risk-loving dormant fund type of folks come into this space. And in the past 12 months, a lot of the bulge bracket folks that we talk to start to really either looking into or started like actively participating in this market. So this whole thing that crypto folks has been saying for many years, that, the institutions are coming. In the past 12 months, at least from like our perspective, we really see a lot of actual institutions moving into this space. So JPM being one of them.
Great. I actually have a couple questions from our audience, and this one I think it's more suited to Yichen and Noora, and as well as Reima. How will Finland ensure in the future that technological innovations and businesses utilizing crypto assets for value transfer won't be lost to more suitable regulatory environments, such as Estonia?
I can maybe take that one because I have a history in European legislation. So I think that the only way for us to guarantee that Finland is on the safe side on this is to advance the matters in EU. So we need more single market approach to the whole issue. Like it was mentioned by you, Piita, in the beginning, that now the world is looking at the risks. And we need to make sure that financial regulation, which always looks at the risks more than opportunities, that we don't go in this balance too far, that we like regulate the whole crypto asset industry into non-existence. We shouldn't do that in Europe, but at the same time, we should try to align the regulation. For example, in order to institutions to really come into the crypto asset world, it means that we need some regulation. So we have to find this balance. And I think that now we are searching for it at least in the MiCA regulation in Europe, that we try to get a very good balance.
So generally speaking, you could say the direction towards crypto assets, it's becoming more favorable, at least in Europe.
At least I'm not saying like Charlie Munger last week that this is a disgusting development and it is contrary to the interest of civilization. This is what he said at Berkshire Hathaway Chamboree last week. So I think that there are more opportunities. And like all the technological innovations, it is a double-edged sword. That you can do harm in the world. You can have corruption, you can have arms trade or illegal activity, everything what can be done in normal finance world as well. But also you can do a lot of good things. So that's why it's important to have the regulation in balance.
And then a last question from our audience. Why would cryptos democratize lending and borrowing more than current peer-to-peer platforms operating with traditional currencies? I feel like we touched on this answer, but something more clear for a listener today. Maybe Raoul or Yichen?
Sorry, just to clarify this.
You go.
Yeah, just want to clarify the question. Was the question, how does cryptocurrency going to democratize borrowing and lending, so credit, as opposed to the current DeFi offering? Is that the question?
No, they were asking why would crypto, in other words, I think they were trying to do a comparison between crypto assets as opposed to current peer-to-peer platforms operating with traditional currencies. And no specification on peer-to-peer platforms, but I'm imagining something that is outside of the traditional regulatory standards. So okay. I think the question has been answered, but
yeah, Raoul, please go ahead. You can take the first step.
Firstly, there are two different things. One is actually a borrowing and lending market based on cryptocurrencies themselves. These are not US dollar markets. Any time you have kind of US dollar or euros or other kind of base layer fiat currencies is when it's a stable coin involved. So these are not normal markets. So it's not you and I going to get a mortgage or borrowing some money to buy a car or lending some money to get returns in the traditional markets where returns are actually driven by central banks. These are actually not driven by central bank money flows as much, because a lot of it is based more like the securities lending market in terms of how much demand is there for a particular currency. And there's also more complications with that because there's something called staking where you can actually earn a yield on the currency. So what's happening is these markets have, and we're not yet sure what the risk profile is of these decentralized exchanges or the DeFi platforms, but it looks like you're getting something like between 3 and 10% yields, which is a very different world than the traditional world where there's no way of getting that without taking really extreme risks. It's because it's based not on the traditional financial system, but this new crypto system.
Okay, thank you. And just as a final question, we're wrapping up now, but one question I have just from listening to the conversations, listening to the different perspectives, like my concern, I guess, from my perspective, how accessible is this? How accessible are cryptocurrencies for an average user? So, in other words, when you're discussing that this 23-year-old can start building his nest egg because he has invested in this 60 million euro apartment or $60 million apartment in, Midtown Manhattan, like how accessible is the information to know what you're doing? That's my question. Like, how is the education there being democratized as well? Because it feels very esoteric and very limited in terms of who knows what.
The question is who knows how Google works? What's their algorithm? What is their business model? How's Tesla work? What's its valuation? We don't know. They're all subjective. But I believe that regulation needs to make sure that people don't take excessive risks. So if they're going to take investments, then regulate some of the leverage that people can take. But we have no right to tell people what they can invest in and what they can't. That is not right. To try and help them not lose all of their money, not by telling them the investment's wrong, but don't use leverage, that's the right thing to do. So that's the fine line of regulation.
Wonderful. Does anybody else have any parting words to say? Yichen? Reima, Noora?
I'm just smiling because I think Raoul takes a very perhaps, if you like, so we deal with this a lot, right? So we work with regulated players both in Europe, in US, and in UK. I think this highlights a little bit of a difference in terms of approach to regulations here. So Raoul is obviously a strong advocate of free markets and which I think is important values. Whereas perhaps in Europe, at least here in Finland, a lot of the financial regulations at the end of the day boils down to a lot of consumer protection type of aspects, right? So make sure that when normal citizens go into a new asset class, they don't lose their shirts. Sure, limiting leverage is one of them. But then if you look at, for example, in 2017, in the ICO boom, there was just a chunk loads of scams going everywhere. My personal opinion is that perhaps regular play a role in doing a little bit better in terms of consumer protection, because you can't expect everybody on the street to have the capability, patience to perhaps truly understand what is a tokenized share offering is, right? So perhaps the government can play a little bit more role than just limiting leverage.
And the civil society can play a very important role in promising that everyone has the basic financial education. So you don't have to care about the technology. You have to care about the people, understand when there is good returns, there probably is also good risks, or the risks are actually there. So you don't have to know much, and you can still protect yourself if you know the basic things on financial literacy.
Right. Absolutely wonderful. Thank you so much for your answers and the comments, and I learned so much today, and I believe so many people watching here have so much to take away from. Just a reminder to our audience, if you have any more questions, please send them in, but also if you'd like to have your comments answered or just want to know what goes on next, please feel free to reach out to us. Thank you very much to our wonderful speakers, Reima, Raoul, Yichen. I really hope I'm saying this correctly. And Noora.
You're doing great. You're doing great.
Okay, great. Thank you. Thank you so much. And I hope that these conversations continue way after. And I'll personally probably reach out to one or two of you if you don't mind, like the little picking of the brain to say, hey, but what about this? We didn't get there. So anywho, but thank you very much and have a wonderful evening. Thank you so much for joining us. This has been a Miltton Futures event and produced by Miltton Contactless Events. It's been a pleasure being here and discussing this subject with you. I've learned so much, as I imagine so much of our audience members have, and I look forward to doing this again soon. Have a good evening.